Hello and good morning. My name is Fei Kwong, producer of the DUOT Financial Channel. This is the next in our executive interview series, and the subject of the interview today is our CFO, Adrian Goldfarb. Welcome, Adrian.
Thank you, Fei.
Let's start by learning something about your background. What can you share with us?
So I was born in the United Kingdom. I grew up there, and I started my early education there, obviously, including I did my accounting training at college. And then a couple of years after that, I went to work for a few years, different industries. But then I came to the United States, and I resumed my formal education there by attending Rutgers University, where I did a bachelor's in business administration. But I specialized in finance, and I've always had that background.
I know you have been with the company for a number of years.
Right.
Can you tell us how and when you joined DUOT?
Yes, as everything with me, it's a little bit more of an involved story. We have to go back a little bit in history. I joined a company called Information Systems Associates, actually on their board of directors in 2010. I was already a CFO at a different company. And I thought I was just going to have a nice, easy life, attending a few board meetings per year. But it became very clear in the early days that the company, the ISA, was struggling. And so in 2012, the founder of ISA asked if I would join as an executive and take over a senior management role. So I joined them at that time as both their chief financial officer and also as their president. And that led to, a few years of trying to do a turnaround effectively on the company, which is the area I specialize in. And it became clear that we wouldn't be able to raise enough money as that company. It didn't have enough of a product line that we could really grow that to something that would be interesting for the shareholders. So we started looking for a company to merge with. And interestingly enough, DUOT found us. DUOT was a private company at that time, and decided that they wanted to go to be public. And ISA was a public company. So at late 2014, we had a series of meetings. We executed a letter of intent, which led to a definitive agreement, and then the companies merged. Now, normally in this case, you usually, the old management normally departs because typically management. However, because they didn't really have a CFO at that time, and they didn't have public company experience, which is my background, they asked me to stay on. So I became, in effect, DUOT Technologies Group, which is what ISA became as the merged company. I became their chief financial officer, and the rest is history. I've been here at DUOT specifically since 2015, and still enjoy the job.
Can you tell our audience why you decided to specialize in microcap companies?
That's a very good question. So once again, give you a little bit of history. So I started my early career, with very big companies. I mean, I started my career after I came to the United States and graduated with IBM. And I worked with IBM for a number of years. And then after a short break with another company, I went to Fujitsu, and I spent about 10 years with Fujitsu. But during that time, I realized that I actually enjoyed the smaller divisions within those companies. I really liked companies that were, around 100 people or even less. And so when I moved forward and decided to change kind of my path from being in the IT space, which is where I was, I actually worked for a number of companies. I worked for a company that was a division of the Weather Channel, which was about a 50-person company, and realized that I really enjoyed those environments. And so that was obviously in the private sector. I did some work. I worked in Austria for a while. But then after I moved back to the US in about 2003, I worked in a number of consulting assignments. But then someone said to me, hey, you've got some good background in small companies. Would you be interested in being a chief financial officer for, in the microcap space? And I mean, I knew what microcap was, but I didn't realize that microcaps as a public company have pretty much all the same requirements as a much larger company. And it's very challenging. So I just sort of fell into that like most people do. And I started with my first public company in 2008 as a CFO. And I learned really the public side of microcap from there. And I really enjoy it. I really like the challenges that come from the smaller companies. You have a lot of authority, you have a lot of ability to do different things, but you still have to work within the regulated environment. And so for the last, 12, 13 years, I've specialized in microcap, and that's probably where I'll be for the rest of however long my career is going to be.
Turning to DUOT as a public company, what are some of the challenges?
So the challenges are actually somewhat as I described previously. When you have these up-and-coming microcap companies, typically they start out always by being very undercapitalized. Now, the good thing is a lot of people say to me, well, why be a public company? Why not just be a private company? Well, at one time, certainly in the last maybe 5 to 8 years, it was actually easier to raise money for a public microcap. And so one of the challenges when I came here was that DUOT has had then and has now fantastic technology. I mean, it's one of the best technologies for such a small company. But they were very undercapitalized, both, from a historical basis and even at the current time. And so consequently, that's one of the things that we had to work on. And, it's very difficult. You need to hire good people. People in the technology space, as you know, are not inexpensive. Typically they're highly paid people. They have many options to go to, particularly with the growth in technology the last few years. They have some very, very big salaries that are offered. So those are some of the challenges that you have to compete with. And you're doing a lot with sometimes, with not that much money to operate with. And over time it becomes easier. So we did a very, very difficult raise back in 2016. That was a debt raise, was very expensive, and was really had the company on edge for quite a long time. But then we moved through in 2017. We did our first major equity raise. We were hoping actually to uplist at that time. It didn't happen, which is quite common. You don't make it the first time. And that gave us enough working capital to move through 18 and 19. And then at that point, we decided that now would be the time to upgrade to a NASDAQ company and do a further raise. And so they get just a little bit easier each time, and we were successful in uplisting to NASDAQ. So the challenges now are different challenges. You have to stay ahead of the technology curve. You still have to hire good people, and you still have to manage your cash. But it becomes a little bit easier as you go along.
One of the highlights was achieving the uplisting early last year to NASDAQ.
Yes.
Can you give us some insight on that process?
Yes. That is, something that is a big achievement. It was a big achievement for the company. The process is quite complex and is becoming even more complex. We are a public company, so we're regulated by the Securities and Exchange Commission. I won't take you through all the ins and outs of the rules and the difference between a 33 Act company and a 34 Act company, but we're regulated by the SEC. But when you move up to NASDAQ, you're going to what's called a listed exchange. And a listed exchange has their own set of rules. Now, they typically obviously are in concert with the exchange rules and the SEC, the regulatory commission. But you then have another set of rules. And one of the things that they want to make sure is that companies that uplist to the NASDAQ can maintain that. So, a company could have a very good year and have, enough cash on the balance sheet and have enough shareholders, but then they may have a very bad year afterwards and maybe not be able to maintain that. So what NASDAQ does is they make you jump through a series of hoops. You have to have enough money, number one. Your shareholder base has to be of a certain size. And they even do different classifications among that. So certain shareholders don't count, towards the count. So you run this incredibly complex worksheet, where you go through and you look, and it's I don't want to describe it as a game, but it's almost like a game where the challenge, if I do this, what's the effect here, and you're managing through that. So those are some of the challenges. But the biggest thing is to make sure you have a business that investors are willing to put money into, because you can meet all the requirements. You can have enough money, you can have enough shareholders, you can have a business that's going along. But if it isn't very exciting, then people are going to say, well, why would I buy shares at $7 or $8 or $9 a share? Because it's probably going to be that way 5 years from now, and I won't make very much or any money, or I may lose money. So they want to see that your shares are not only reasonably priced at the time, and typically there's a discount that's involved in that, but they want to make sure that it can be a multiple,
Right.
much more than that going forward. And one of the challenges when you go up to NASDAQ is, what's the discount going to be? Because you might be trading, let's say in our case, we were trading at about $7 a share. But typically the banker will say, well, if they can buy it in the open market at $7 a share, they want to buy it from us at a discount to that. And so negotiating that discount is a very, very interesting exercise. Obviously you want it to be as close to the 7. They want to be as, much less than that. And then you get into issues, are you going to issue warrants with that, which is typically very dilutive of the cap table. So those are all the challenges and steering around that. We were lucky, we have very, very good attorneys who helps us with a lot of that. My department happens to be pretty experienced at this now, so it's very much a collaborative effort between ourselves and the attorneys. And then we also have excellent auditors as well, who are obviously there to make sure that we're not violating any rules, that our accounting is proper. And so it's very much a team effort. So we had a great team that worked on this. And that was the challenge. And then it came down to, just as by way of historical, we did our uplist in NASDAQ right before COVID. I mean, COVID was already sort of known about, but the impact hadn't come. People didn't know how bad it was going to be.
Right.
And so we got our raise literally done the week before this all happened. And so the timing in this case was very good for us.
It was perfect
yes,
timing
perfect
for
timing.
that.
But those are some of the challenges that go into uplisting a company.
Let's now turn to DUOT as a product and technology standpoint. What makes the company an attractive proposition for an investor?
That's also a very good question. So I mentioned earlier, before I agreed for my company to merge with DUOT, we were obviously the public company, I wanted to make sure that the company had a very good future. And so we looked at a number of other companies, and they had interesting products, but they may not have fit with what the company was doing. And when you looked at the future, AI was just starting to come onto the horizon. Right. So with DUOT's product set, I was very impressed. As I told you, I started my career with IBM. I've been around technology for many, many years. And what impressed me about DUOT was they had built a structure that was a little bit different from many other technology companies. So if I can give you an example, a typical software company, when they do a project with a client, they will go in and their salespeople will sell to the client. If you implement our product, you'll get all these benefits and advantages. Otherwise, why spend the money? But what companies often find out afterwards is that although the product is capable of doing that, many times the company has to change its business processes in order to work with that product. That can be very expensive, can involve quite a bit of disruption. I know of a story, I obviously won't mention the names of the companies, years ago, where they were implementing a very, very big software product, and they were a staffing agency, and it got so bad that they actually ended up missing payroll because their systems were very much disturbed by the arrival of the new product. They just weren't ready for it. So what impressed me about DUOT was DUOT's approach was completely different to that. DUOT talks to its customers primarily today in the railroad space. And what we do is we try to educate ourselves as much as possible on the railroad space. We've had in the studio, we've had Ed Harris, who's our new board director, who has obviously been a railroader for many, many, many years. So we try to understand from Ed and from other people in the industry, what are the problems you're trying to solve? And then what we do is we take our underlying product and we adapt it to that. So when we go in, we're not saying to the railroaders, because we're far too small to be able to do that, don't change the way you're doing things. Let us improve the processes that you already have. And that's one of the reasons why, as I think we also talked about in one of the interviews, DUOT's product is, in a way, it's industry agnostic. So you can go in and you can adapt it for different, for different things. Now, obviously, it's specialized. In our case, I always like to say it's specialized in moving objects. So rail cars move along the rails, right. And we take images and we do analysis and we talk to sensors, and now we're adding artificial intelligence on that effectively to automate the inspection. But inspection is a railroad process. We're not going to change the way they do inspections other than maybe the processes they use. So that's one of the things that I really liked about the company. I think it'll be a very good foundation as the company moves forward.
I'm aware that you speak quite often at investor conferences. With the restriction that were recently put in place, how hard has it been to engage with our shareholders?
Yes, unfortunately, in 2019, I did probably more conferences than we had done historically. And I happen to like the conferences because A, you get to give a presentation for about a half an hour, or it's usually 25 minutes plus questions. And then you sit with individual investors. And the last few that I've done, it has been back to back. So, we've started at, in the case of the West Coast conferences, you start at 7 in the morning with your first one, and you finish at about 5 in the evening. And they're half an hour segments. So when COVID came along, obviously, we were not able to travel, and most of the conferences went to virtual. And it's a good substitute, but it is a substitute. There is sometimes it's much easier in person to sit and get down to the heart of the matter. And you're not also dealing with technical challenges of, the microphone goes off or the camera's not working properly. And so we've done the best that we can there. But I'm actually hoping that we go back to the in-person conferences, because I think they're ultimately more effective, although I'm glad we have the virtual so we can still at least keep up the communications and talk to our investors and talk to shareholders and talk to potential shareholders. So I'm hoping that as we get probably later in 21 and then hopefully in 22, we will go back to a regular conference schedule.
What can you tell us about the company's future plans?
So as you're aware, this is being recorded shortly before we release our 10K, so we're in what's called a blackout period. So I can't share too much in terms of that. What I can say is that we continue to focus on a couple of different areas. First of all, continuing to build our technology base, as I described earlier, with a big focus on artificial intelligence. The company's going to be investing more and more resources into that space. We also expect to expand into other industries, but once again, with the same focus of dealing with moving objects, things that need to be analyzed. This is not a secret. People are maybe not aware, for example, that we have a project that was done at New York City Transit for the subway. And we have a system that's at the 50th Street station on the C line that evaluates passengers on the platform. This was an outgrowth of some concern by New York City Transit that there were too many people that were ending up on the tracks, obviously a very dangerous situation. Mm-hmm. But the thing is, you can't just take pictures and say, oh, someone's on the track, because there are people in the system that are supposed to be on the track. So for example, we used AI to identify, hey, if someone's coming along and they have a yellow jacket and a hard hat on, they're meant to be there. On the other hand, if someone is, just on the, falling on the track, and we have a video of that, they're probably not supposed to be there. Right. And so it'll be further developments in that area, where it may be involving analytics and video capture and AI, and using our experiences into those areas to expand our product set.
Lastly, please share with us anything that you think our viewers may find interesting.
Well, I'm thinking about this, and I'm thinking, okay, what stories can I share with you? And I've had a pretty long career, and I've worked in many different countries. I spent quite a bit of time, for example, in Southeast Asia. I spent a lot of time in Europe. I've been to parts of what used to be Eastern Europe. And obviously, I've spent a lot of time in the US in many different states. And it's just interesting to look at the different ways that business is done. And, I could tell you a lot of stories about having to bribe my way out of a certain country, otherwise I might get locked up. when I was in South America. I was in a country, I won't name it, but it was pretty dangerous at that time. I guess when you're younger, you don't really realize. I'm not sure I would do it again, but you know, I was down there at a time when there was some quite big financial, you know, problems and some issues with. There was actually a geological problem in the country, and there was a big mudslide that killed a lot of people. So the story I like to tell, that's a lead into the story. The story I like to tell is I actually worked for. I wasn't actually working for IBM. I was working for a division of Fujitsu at that time. I'm sorry, no, I back up. It was with IBM. I apologize. I came to the airport, and because of delays in the traffic, I didn't make my flight. And because of all the political situation in the country, they were telling me not only couldn't I not fly out that night, I couldn't fly out the following night, and they probably couldn't get me on a flight for 5 days. Wow. So I turned to my colleagues, my IBM colleagues who were there with me, and I said, okay, you know, can you get me a hotel at least if I have to stay here? And they said, no, you're probably going to have to sleep on somebody's floor in the apartment, which, you know, didn't really fancy much. Right. So they said, but don't worry. They said, we actually run the data center down here for the national airline. So I said, okay. So they went and they made a call. Now, understand that the gate agent had already told me that I couldn't get on this flight. So they went and made a call, and apparently because they ran the data center, someone in the data center went and took somebody else's reservation and gave me the reservation. So I went back to the same gate agent. She didn't bat an eyelid as I, you know, handed a ticket, and they gave me a seat for that flight. So, wow. Anyway, so, you know, it's those experiences that really, you know, give you, you know, how lucky we are to operate in the US. You know, it's such a stable business environment. And, you know, I'm hoping to bring that vast experience, you know, for the next several years into helping drive the company forward. And obviously the big thing is to give a return for our shareholders.
Well, thank you for spending time with us today.
You're welcome.
This has been another interview in our continuing DUOT Executive Interview Series, where we get to learn more about the DUOT leadership team and their perspectives on the company. My name is Fei Kwong for DUOT Technologies Group, listed on NASDAQ, symbol DUOT.